Okay. Hey guys, this is Telly, your local lender, and I just wanted to take a second and record this for you just in case anybody was unable to make it to Coffee to Closing today. So real quick, Coffee to Closing is just this cute little name I came up with for a meeting that I do. I used to do every month, but I'm trying to do it every week now on Thursday. Basically, we can get together on Zoom or you can join me at a local coffee shop. I like No Coffee Company. It's the new one that just opened up right across from Maricopa High School. The woman that owns it, the young lady, I should say, that owns it, Brooklyn, is just so sweet. She's a young entrepreneur. So it's locally owned and their food is amazing. In fact, I got a pastry to go gluten-free. They have tons of gluten-free options if you're like me. So anyways, every Thursday, I'm going to be there from 1 to 2, and it's just a laid back, super chill environment for you to come and learn more about buying a home, about credit. I cover all kinds of topics. So I try to keep it pretty specific each time. But if you want to come join me just to, pick my brain about something, or if you want to apply and see if you're qualified for a home, you certainly can. If you just want to stop by because you have some questions or just to get an idea of like the market, what's out there, come do that too. But anyways, every Thursday from 1 to 2, you can count on me being at No Coffee Company. If another day or time works best for you, just reach out. Yeah, Coffee to Closing today was a lot of fun. Thank you everyone who came out. And for anyone that missed it, let's just dive in and kind of talk about 10 hacks that you can do to take control of your credit. Now, I'm going to go kind of fast. It's if you have any questions, don't hesitate to reach out to me. Okay, so step 1, guys, this is it's kind of basic stuff here, but anytime I ask somebody what their credit score is, they either don't know or they say, honey, can you please turn that off? Mommy's trying to record a video. You can go watch it in my room if you want. Sorry about that. The joys of working from home, right? But they either don't know what their credit is, or they'll tell me a score and I'll say, how do you know that? And they'll say, because Credit Karma. Now, I'm not trying to bash Credit Karma at all. It's useful for a few things, but Credit Karma is never accurate. In fact, all of these apps and websites that you see on your screen right now, none of them are going to be 100% accurate. So whatever you're seeing on CreditWise or Credit Sesame, Experian, Mint app, My FICO app, they're going to have like a general idea of what your consumer score is, but it's not going to be spot on. And my screen just went green for some reason, but hopefully you're still able to see the presentation. So what I recommend is downloading at least 3 different credit monitoring apps. And in fact, your mobile banking app, like wherever you bank these days, usually the mobile banking app will give you your score every month. So use that one. You can use Credit Karma if you like, but I would definitely recommend getting it monthly from a few different sites, just so you know what's on there and what's changing, if it's improving or if it's gone down, and you'll be able to have like a better idea. Now, one of these apps here, you can see this one down here on the bottom left-hand side, Experian app is great. Now, the free version will only give you your Experian score, but that's okay. And what I want you to do is either use the app or just go to Experian.com and do this boost for free. So what it is say maybe you don't have a lot of credit or you're just starting out. What it does is it goes through like your last 6 to 12 months of bank statements, and it looks for any recurring charges, like if you're paying a cell phone bill, utilities, even your rent, and it will give you credit for paying those bills every month. So those are types of things that don't usually report to the credit bureaus. So Experian looks for those types of recurring payments and will give you a boost. Now, not everybody's boost is going to be the same. Like For me, I'm 32 and I've been using my credit since I was 18. So like I've had credit before, you know. So when I did the boost, I want to say I only got like 4 or 5 points. It wasn't that much. But my husband, on the other hand, who's older than me, but he like has not really used his credit that much in his life. Before we got together, I don't think he'd ever financed anything. So when he did it, he got like, I want to say 30 something points, almost 40 points, because his didn't have as much to work with. So that made a really big difference for him. Whereas I think, someone that has more credit history probably doesn't see as big of a boost, but it's completely free. It takes like 2 minutes to do it right there from either the Experian app or the Experian website. And you might as well. Because another thing I want to say about this is when you're applying for a mortgage, we are going to use your middle score as the decision making score, right? So let's say you had like a 650 with Experian, and then you had like a 630 or something with TransUnion, and you only had like a 615 with Equifax. Your low score really doesn't matter. But if you were to do the Experian boost, and then now that becomes like higher, it raises what your middle score is. Does that make sense? Am I explaining that right? So like if you can boost them, if you already have one that's high and your Experian is the one that's in the middle, well, that boost could make a really big difference for you as far as what products you qualify for. If you can get any down payment assistance, because with the down payment assistance, some of them are tiered. So for example, if you have like, a higher credit score, you can get more of a down payment assistance for having just a little bit higher of a score. Or, at the end of the day, it's all about your interest rate, right? So having a better score, you're going to get a better deal on your interest rate. You're going to get a better deal on your MI premium, if anything, even on your homeowner's insurance. So definitely do it. Take advantage of that for free. Now, here's another thing I want to talk about. Disputing any inaccuracies on your report. I can help you with this because this is not a one size fits all, guys. When I look at your report, it's going to be really detailed. And let's say you have a collection or something negative that's on there, right? A charge off or a repo or something, right? We'll look at the dates. We'll look at when it's reported and what like the balance is, if there's a duplicate, if anything is off or if it isn't accurate, I can show you how to dispute it and get it taken off, hopefully. So the burden of proof is on the creditor, right? So if they're reporting inaccurate information, or let's say they're reporting something differently to the tri-bureaus, then you as the consumer, you can go and dispute that. And if they can't verify that you owe that debt or that the dates or the balances are correct, then they technically need to remove it. So I'll walk you through this, but it's just it's something that I think we should do. It's a little bit of legwork, of course, to go through it, but it's definitely worth it if you have negative items. And kind of more on that topic is collections. Now, before you just go crazy and pay off a bunch of collections, we want to talk about it first and make sure that that's the right thing to do. I know this sounds kind of counterintuitive, but sometimes paying off a collection isn't going to help you. In fact, there could be instances where paying off a collection account may even drop your score. So before you do it, we just want to make sure that you're paying the right amount, that it's going to have a positive effect on your score, and that you have what's called a pay for deletion. So it's a template I can email you where it's, just a couple things you have to complete. And you want to exchange this pay for deletion letter and have that communication with the debtor before you settle. Because if you pay off you could pay off a collection and all they do is then update the remarks that it was, handled, that it was paid derogatory. So it's satisfied now. And then it could update the date of that collection to today's date, which in turn could actually hurt you. Cause like, let's say you have a collection on there, and it's 4 or 5 years old, it's already basically done the damage that it's going to do. Like when a collection pops up on your credit, your score could tank, but then over time, as it seasons, it doesn't really have that much of an effect on you. So then if you were to turn around and go and pay it today, then it's not going away. That collection doesn't disappear. They might just update the date to now, which could then, it's almost like hitting the refresh button, you know? So just be mindful of that. And if you have any questions about it, let me know. Because sometimes it's okay just to leave it. Like if it's, we might want to just move past the collection and just not even worry about it, especially if it's a medical collection or something. But I can walk you through it. I can show you how to get a pay for deletion. I could coach you on what to say when you call the collections. And we could do a 3-way call if you want. I can help you. So that's something that we'll definitely want to talk more about. Now, this is something that's really, really important, is making sure that you understand the different types of debt that there are, the different types of credit that you can have, and what is good and what is bad, and kind of where you should be with those things. So for example, I see a lot of people who get installment loans and they think that they're helping their credit, right? And I'm sorry to say this, but an installment loan, like let's say you go and you get a couch or something like that, and you get like a loan basically, and you pay off an amount every month until that loan is paid in full. That's called an installment type of debt. And it's not really bad. It's not good. It just depends on what you already have on your credit and what the history looks like. So, but for example, if you were to, instead of getting a loan and paying on it every month for like 6 months, 12 months or longer to build your credit, instead, what you may want to do is get a revolving line of credit. So that would be like a credit card. So if you have the choice, right? Let's say you're brand new to credit, you're just starting out, you're trying to think, okay, Telly, how can I get my score to increase the most, the fastest? I would say forget about installment loans and go get yourself a couple of secured cards. And I would always start with 2. If you don't have any type of credit cards, get 2 secured cards, and that will be better, because even just after 1 or 2 billing cycles, your score will go way up if it's a credit card versus months and months and months of paying on an installment. And then another would be like an auto loan. So a lot of the time, people treat auto loans like a stepping stone to homeownership. Not good. Now, obviously, you got to get around, right? You got to have a car. I understand that sometimes it's not an option to not have a car payment. Me personally, just as a loan officer, I can't stand car payments. And I hate when I see that, especially if it's like a really young person who has good credit, but they have like a really high car payment. That could really stab you in the foot when it comes to what you qualify for a home. Now, this isn't straight up across the board, but just like in general, think about it like this. For every $100 a month for your car payment, you might as well just take like 50, 60,000 off of what your pre-qual would be for a house. So if you have like a 400,000 or 400,000, what am I saying? If you have like a $400 a month car payment, that's all like, and you go to try to apply for a home, you might be qualified for like $150,000 less on a mortgage just because of that $400 payment. And that's what we call your debt to income ratio. That's where that comes into play. So just be careful with auto loans, okay? Maybe talk to me like before you get a car or you're thinking about getting a car. Let's look at your income and look at your debts and kind of see if it's, going to hurt you or how much room you have. I can even tell you like, all right, it's fine. You can get a car, but make sure your payment is under this amount, So, but it's definitely like installment loans, auto loans, they're definitely not a stepping stone to building good credit or buying a house. And, in my opinion. Now, talking more about credit cards, there is a myth, and it is 100% a myth that you need to carry a balance on your credit card. No. Now, let me explain. You need to have activity every month on your credit card, right? So you need to use it. Otherwise, they'll probably close the account. Like different financial institutions might have, different timelines, but like for most credit cards, if you don't use them after like 12 months, they'll just close the account. So you definitely want to use them every month, make sure that there's activity, but don't carry a balance every month. Pay it off in full if you can. And now if you can't pay your credit card off to zero every month, at least try to make sure that your balance is under 10% of whatever your limit is. So if you've got $1,000 limit and you've used it, you've put gas in the car or whatever, and you can't pay the whole thing off, at least try to get it under $100, get the balance under 100. Okay. So it's less than 10%. Now, I'm trying to think how I want to explain this. Whatever your due date is for your credit card, just don't even worry about that. Forget the due date. It doesn't matter. That is an irrelevant date. The only date that I really want you to start focusing on is when does your billing cycle end every month? Because like, say, for example, your billing statement closes on like the 18th of the month or, 16th, 18th of the month. Your bill probably won't be due until like, the first week of the following month is when the payment's due. Now, that doesn't tell you anything. That doesn't help you. What you want to make sure is that your balance is zero or less than 10%. You want to get that balance paid off before the billing cycle ends, because whatever your balance is at the end of your statement, that is the balance that gets reported. So just quick little side story about this. I did have a client who basically the only credit that he was using was his Chase card, and he had a pretty decent limit, like 10 grand. And he was wondering why his credit score was so low. And I explained to him, I'm like, well, you're never late on your payment. It's always done. But we went through the last 12 months and I was like, your credit limit is 10,000, but your balances have been 9,000, 8,000, 8,500, 9,000 again. Like, it looks like he's maxing it out every single month. And, as he told me, he's like, well, Telly, I always pay it all off. He paid all of his bills, all of his groceries, everything went on that one credit card. And he paid it off when he got the bill every month, but it doesn't matter because when his billing statement was generated, he had a really high balance. So he didn't know that. He didn't know that that's when it was reporting. So that's what it looks like in the eyes of the tri-bureaus. So anyways, if that's confusing, message me. Let's talk about it more, because you might need to go into each of your credit cards and check your statements to see when the billing cycle date is. A lot of people don't even know when their statement date is. So just go in there, see when it is. And maybe for the next couple months, you need to put a reminder on your phone or something. That way you're used to it. But that is something that you definitely want to do. Now, this one is not going to apply to everybody. Okay. Not everybody's this lucky. Lord knows I wasn't this lucky. But if you have like mom or dad or grandma or somebody who is, financially responsible and they're pretty credit savvy, then maybe reach out to that person and ask them to put you on as an authorized user on one of the card, like a card that they've had for a long time that's in good standing. because that will help your credit. It will give you both time. Like, so if you're young, right? If you're, 18, 20 or whatever, and you get added on to mom or dad's card that's been open since like the 90s, now it's going to give you like 30 years of credit history, which is really good because the length of time you've had credit plays into your score. So that's good. And then also it'll help you have a good balance of credit. So for example, like I was talking about credit utilization a second ago, let's say you have a few credit cards and you have high balances, a couple things are maxed out, and maybe you just don't have the funds at the moment to pay them down. So if you have say you have 3 credit cards, and between the 3 of them, you have a $3,000 limit, and between the 3 of them, you have like $2,000 or more in debt, right? Spread out on those cards. So basically, you're like over, what is that, 60% credit utilization, and the goal is to be under 10. So if mom or dad or somebody adds you on to their credit card that has a really high limit, then that's going to make your overall, why does this keep turning green? So if they add you on to a card that has a high limit and a low balance, that's going to make your overall credit utilization then go down. So just make sure that whoever is adding you as authorized user, make sure that that card obviously is in good standing and that it's not maxed out. Otherwise, this could hurt you rather than help you. So again, I don't know how many times I've said this. If you have questions or you're thinking about it, give me a call. And by the way, I get this question all the time. If somebody adds you as an authorized user onto their card, whatever your score is doesn't hurt them. It doesn't matter. So this wouldn't hurt them to add you, just because a lot of people want to know before they go and add somebody. Is that going to mess up their credit? No, it won't. In fact, they don't even need to give you access to the account or give you the actual physical card. They could just add you to it. You don't have to, you don't have to use it. My point is just think outside the box, right? So if you have that option, do it for sure. Here is just this one's just a gimme. This is the easy thing you can do online, and you can get on average about a 10 to 15 point boost on all 3 of your credit scores. And you just go to optoutprescreen.com. That's all you have to do. And then the second option, you can do this every 5 years. The second option down will be to opt out electronically for 5 years from credit solicitations. So do you ever get those annoying things in the mail that say you're pre-approved, congratulations? So this will take you off of the mailing list for credit solicitations. And by doing this, you can get 10 to 15 point boost on your score. And then finally, guys, don't pay for credit services that you don't need. Now, you might disagree. I have people who think that it's worked in the past, but me personally, in my opinion, I'm not sold on credit repair companies. And all of them to me just feel like, okay, here's my question. What is the incentive for a credit repair company to want to get your score up fast, right? Why would they be in a hurry? Usually they make their money off of your monthly payments, your monthly subscription, or they have you sign a contract, that you're going to use their services for X amount of time. They want to put you into some kind of credit plan, and then they charge you fees. I don't know. I'm not sold on it. I think, honestly, you can do this yourself. I can help you. I can show you how to do it. Yeah, it's a little bit more work if you're doing it yourself, like disputing things or, kind of retraining yourself on how to use your credit cards. It's obviously going to take work. Anything worth doing is going to take some work. But why would you pay somebody to go and do this for you when you could just spend maybe part of your afternoon getting it done? And yeah, take care of it yourself. So anyways, guys, that's pretty much everything that I wanted to cover today. I'm sorry if some of that like was pretty repetitive. Maybe you learned something new, maybe you didn't, but keep in mind, like all of this is just based off of my opinion from being a loan officer. This is kind of very much lined up with how we look at it from just a lender perspective. If you have, I'm not trying to tell you that mom or dad or somebody is wrong if they're telling you something different. This is just, one person's perspective because I want to help you understand when you go to apply for a mortgage, what are the types of things we're looking for and what can help you, what can hurt you, and what kind of steps you should be taking if you want to get pre-approved. So if you want me to take a look at your credit for free, I will do that. I will send you a copy of your credit report along with my notes. We can go through it together. We can meet up for coffee sometime. If you're not ready for a credit pull, that's totally fine. Having me check your credit isn't really going to hurt your score that much. You'll have an inquiry, obviously, but it's a mortgage inquiry. So it's different from, say, opening a new credit card or trying to get a car or something. The type of inquiry that you have when you're shopping for a home loan, usually, doesn't really affect you. Maybe a point or two, but it's not that bad. And anyway, it's worth it, in my opinion, if you are serious about buying a house. We might as well just take a look at it. And today at Coffee to Closing, actually, I got a lot of really good questions, but one question that a friend of mine asked was, Telly, when should people call you? Like, what's the timeline that you need to start working with somebody on their credit? And my answer to that is literally the moment that being a homeowner enters your thoughts. Like as soon as you think, I'd like to buy a house someday, call me. It's never too soon to start working on. And if it's not credit, maybe it's like what type of jobs you should be, like if you're thinking about a career change, changing jobs and stuff, that could affect your pre-qualification or at least kind of get you set up on the right path. I call it your roadmap to home ownership. So credit is just one of the pieces of that puzzle. So I would love to help you make sense of it and put it all together. So anytime, it's never too early. I would say bare minimum, we need to talk like 30 days before you want to buy a house, right? That's a good amount of time. But it's truly never too soon to start looking into this. And it's definitely worth the time. I would love to help you. So I hope this information was helpful. If you need me, give me a call. And yeah, thanks for tuning in. Bye-bye.